So to discuss all of this further, I'm joined by Nick Beecroft. He's Senior Foreign Exchange Consultant from Saxo Bank. Nick, thank you so much for joining us in the studio this morning. Now, all right, so it's the first real trading day of the year.
Yep.
How do you position yourself as a foreign exchange investor? Do you change your portfolio, keep this similar to the end of 2009 and wait for more news?
I think we could see a continuation this quarter of something of a sweet spot for the dollar. The market's focus has moved onto growth now quite squarely at the moment, and we're seeing some quite encouraging signs out of the US economy, which I think will lead to a stronger dollar in the first quarter, but it's a temporary phenomenon, I think.
So what kind of levels are we going to see, and what kind of time frame? Are we talking 2-3 months or a little bit further?
Exactly, 2 or 3 months. We could see the euro dollar down to the low 130s possibly, cable down to the low 150s, etc., and dollar yen towards 100. But then I think economic reality will hit home. We're seeing a bounce in activity due to inventory restocking, due to the lingering effects of fiscal stimulus, and those will definitely run out towards the end of this quarter.
You're definitely ruling out a double-dip recession at this point in time?
No, actually, I'm not. I'm saying the numbers are looking good for the next 2 or 3 quarters for those temporary effects, but then we're going to have, at best, anemic 1 to 2% growth in the States. A double-dip into recession is probably only a 25% chance, though.
Nick, 2009 saw the dollar come under attack, not only because it lost so much value, but also because the Russians, the Chinese, were asking to rethink the way that these the currencies are used. Are we going to have similar effects in 2010?
I think we'll see a passive, if you like, reserve reallocation by those countries. They won't be lauded to the rooftops, but they'll be quietly acquiring other currencies as a defensive measure. But I think that is going to become more apparent as we get into the second quarter and onwards this year.
Now, you'd buy the dollar for the next 2-3 months.
Yeah.
What happens after that?
I think the figures start to look anemic in the States. People get back into this focus on the fact that maybe interest rates aren't going to rise in the States as quickly as people might be expecting. Personally, I don't think they will rise this year or the first half of next year. And so then you're back into the carry trade environment where the dollar is a very attractive funding currency.
What about the euro? I mean, this has come under quite a lot of pressure because of the risks of defaults we saw in certain sovereign states.
Yes.
Is it going to continue?
No, I mean, default isn't going to happen, quite frankly. I think politically is unconscionable, and that if you like, the larger members of the euro would come together to stop that happening. And I think the ECB has inherited very strong inflation fighting credentials from the Bundesbank and will continue in that vein.
So you wouldn't be a buyer on the euro, let's say summer of 2010? I mean, I know it's a lot can happen from now until then.
Yeah, this is a long way away, but I do feel we will end the year higher in the euro against the dollar than we are now. For those reasons, anemic growth in the States, probably preemptive rate hikes by the ECB in the third or fourth quarter this year.
Nick, what about the pound?
Well, I'm a perennial bear on the pound, and I think this year it faces many headwinds, the most important of which is the possibility of a hung parliament, which could be very damaging for the pound. And if the polls are pointing to that, you'll see increased pressure.
But you're saying that the Bank of England won't really announce anything just yet. They're kind of in a wait-and-see situation.
Yes, I think that's the case. And I don't think we can look to interest rates as a saviour for the pound. It's really going to be driven mostly by the political situation. And as we continue with the present situation, we have loose monetary and tight fiscal stance coming, which is always bad for a currency.
Nick, thank you so much for joining us today. Nick Beecroft there.